Types of financial instruments. Introduction. Financial instruments are contracts that represent an asset to one party and a liability or equity to another. They play a vital role in the financial markets by providing a means for investors to allocate capital, manage risk, and achieve returns. This section delves into the various types of financial instruments, their characteristics, and examples relevant to Ghana. Equity instruments. Stocks, shares. Definition. Stocks represent ownership in a company. When you purchase a stock, you become a shareholder and own a portion of the company. Types. Common stock provides voting rights and dividends that vary based on the company's performance. Common shareholders are the last to receive any residual assets during liquidation. Preferred stock, typically, does not offer voting rights but provides a fixed dividend and has priority over common stock in the event of liquidation. Example. MTN Ghana shares. MTN Ghana shares are traded on the Ghana Stock Exchange, GSE. As a common shareholder, an investor can participate in voting and receive dividends based on the company's performance. Debt instruments. Bonds. Definition. Bonds are debt securities issued by corporations, municipalities, or governments to raise capital. The issuer promises to pay back the principal along with interest at specified intervals. Types. Government bonds, issued by the government to finance public projects. They are considered low-risk investments. Corporate bonds, issued by companies to raise funds for business operations. They typically offer higher interest rates than government bonds due to higher risk. Example. Government of Ghana bonds. These bonds are issued to finance infrastructure projects such as roads and schools. Investors receive periodic interest payments and the return of the principal at maturity. Commercial paper. Definition. A short-term unsecured promissory note issued by companies to meet short-term liabilities. It usually matures within 270 days. Characteristics. Typically issued at a discount and does not pay periodic interest. Example. Commercial paper issued by Ghanaian companies. Large Ghanaian corporations, such as Ecobank Ghana, might issue commercial paper to manage their short-term funding needs. Derivatives. Options. Definition. Options are contracts that give the buyer the right, but not the obligation, to buy or sell an underlying asset at a specified price before a certain date. Types. Call option gives the holder the right to buy an asset. Put option gives the holder the right to sell an asset. Example. Agricultural options. Farmers might use options to hedge against price changes in cocoa, ensuring they can sell their produce at a favorable price. Futures. Definition. Futures are standardized contracts obligating the buyer to purchase, and the seller to sell, an asset at a predetermined future date and price. Characteristics. Traded on exchanges, futures contracts are used for hedging and speculation. Example. Commodity futures. Ghanaian exporters of gold might use futures contracts to lock in prices, mitigating the risk of price fluctuations. Swaps. Definition. Swaps are contracts in which two parties exchange cash flows or other financial instruments. Types. Interest rate swaps. Exchange of fixed interest rate payments for floating rate payments. Currency swaps. Exchange of cash flows in different currencies. Example. Currency swaps for multinational companies. Ghanaian companies dealing in international trade might use currency swaps to manage foreign exchange risk. Hybrid instruments. Convertible bonds. Definition. Convertible bonds are debt instruments that can be converted into a predetermined number of the issuer's equity shares. Characteristics. Offers fixed interest payments but provides the potential for equity-like returns if the conversion option is exercised. Example. Convertible bonds issued by Ghanaian companies. A company like Standard Chartered Bank Ghana might issue convertible bonds to attract investment while providing the option for conversion to equity. Preferred shares with warrants. Definition: preferred shares bundled with warrants give the holder the right to purchase additional shares at a specified price within a certain period. Characteristics: combines the fixed income of preferred shares with the potential for capital gains through the exercise of warrants. Example: warrants issued by Ghanaian firms. A company such as Ghana Oil Company Limited might issue preferred shares with attached warrants to make the investment more attractive. Summary: understanding the various types of financial instruments is crucial for navigating the financial markets. Equity instruments like stocks provide ownership stakes, while debt instruments like bonds offer fixed returns. Derivatives, including options, futures, and swaps, are essential for risk management and speculation. Hybrid instruments, such as convertible bonds and preferred shares with warrants, combine features of both equity and debt, offering unique benefits. By exploring these instruments and their applications, particularly in the context of Ghana, investors can make informed decisions and effectively manage their portfolios. Roles of various market participants. Introduction. Financial markets are complex ecosystems involving various participants who play crucial roles in maintaining market efficiency, liquidity, and stability. Understanding these roles helps in grasping how financial markets function and the interdependencies among different entities. This section will explore the roles of retail and institutional investors, brokers and dealers, investment banks, and regulatory bodies, with specific examples related to Ghana. Retail and institutional investors. Retail investors. Definition: individual investors who buy and sell securities for their personal accounts. They typically invest smaller amounts of money compared to institutional investors. Characteristics: often have shorter investment horizons, less access to sophisticated research tools, and a wide range of investment goals, from saving for retirement to building a college fund. Example: local investors on the GSE. Many Ghanaians participate in the Ghana Stock Exchange, GSE, as retail investors, buying shares of companies like MTN Ghana and Fan Milk Limited to build personal wealth and save for future needs. Institutional investors. Definition: organizations that invest large sums of money on behalf of others. They include pension funds, mutual funds, insurance companies, and hedge funds. Characteristics: have significant resources, access to extensive research, and the ability to influence market movements due to the size of their investments. They typically have longer investment horizons and can engage in more complex investment strategies. Example: SNIT, Social Security and National Insurance Trust. SNIT is a major institutional investor in Ghana, managing pension funds for workers and investing in a diverse portfolio of assets, including equities, bonds, and real estate. Brokers and dealers. Brokers. Definition: intermediaries who facilitate transactions between buyers and sellers in financial markets, earning commissions for their services. Types. Full-service brokers provide a range of services, including investment advice, research, and planning. Discount brokers offer lower-cost transaction services without additional advisory services. Example: DataBank Brokerage Limited, a leading brokerage firm in Ghana offering a range of services to retail and institutional clients, helping them buy and sell securities on the GSE. Dealers. Definition: market participants who buy and sell securities for their own accounts, making profits on the spread between buy and sell prices. Role: provide liquidity to the market by being ready to buy or sell securities at any time. Example: IC Securities, a firm that operates as a dealer in the Ghanaian market, engaging in proprietary trading to profit from market movements and providing liquidity to the market. Investment banks. Roles of investment banks. Raising capital, help companies and governments raise capital by underwriting and issuing new securities, such as stocks and bonds. Advisory services, provide advice on mergers, acquisitions, restructurings, and other financial strategies. Market making, provide liquidity by buying and selling securities. Research, offer insights and analysis on market trends, economic conditions, and specific companies or industries. Example: IC Securities acts as an investment bank in Ghana, facilitating capital raising for companies through IPOs and bond issuances, and providing strategic advisory services for mergers and acquisitions. Case study: MTN Ghana IPO. IC Securities played a significant role in the MTN Ghana IPO, advising the company and helping it navigate the regulatory and market conditions to successfully raise capital on the GSE. Regulatory bodies. Roles of regulatory bodies. Market oversight. Ensure that financial markets operate fairly and efficiently, protecting investors from fraud and manipulation. Regulation and enforcement. Establish rules and standards for market participants and enforce compliance through monitoring and penalties. Investor protection. Safeguard the interests of investors by ensuring transparency, disclosure, and fair practices in financial markets. Example: Securities and Exchange Commission, SEC, Ghana. The SEC is the main regulatory body overseeing the securities industry in Ghana. It ensures that the GSE operates transparently and that market participants adhere to regulatory standards. Functions of SEC Ghana. Licensing, grants licenses to market participants, including brokers, dealers, and investment advisors. Supervision, monitors market activities to detect and prevent fraudulent practices. Education, provides investor education to enhance public understanding of financial markets and products. Summary: the roles of various market participants are critical to the functioning of financial markets. Retail and institutional investors provide the capital necessary for market operations and price discovery. Brokers and dealers facilitate transactions and ensure market liquidity. Investment banks play a pivotal role in raising capital and providing strategic financial advice. Regulatory bodies ensure market integrity, protect investors, and enforce compliance with financial regulations. By examining these roles and their specific applications in Ghana, we gain a deeper understanding of the interconnected nature of financial markets and the importance of each participant in maintaining a healthy and efficient market system. Market structure and trading mechanisms. Introduction. Understanding market structure and trading mechanisms is essential for navigating financial markets effectively. This section will delve into various order types, the roles of market makers and specialists, and the functionality of electronic trading platforms. We will also explore how these components interact to facilitate efficient trading and maintain market liquidity, with specific examples related to Ghana. Order types and execution. Market order. Definition: an order to buy or sell a security immediately at the best available current price. Characteristics: ensures execution but not the price. Used when the priority is to execute the trade quickly. Example: trading MTN Ghana shares, a retail investor on the Ghana Stock Exchange, GSE, may place a market order to buy MTN Ghana shares immediately at the current market price. Limit order. Definition: an order to buy or sell a security at a specific price or better. Characteristics: ensures price but not execution. Used when the priority is to achieve a specific entry or exit price. Example: limit order for CalBank. An investor may place a limit order to buy shares of CalBank at GHS 1.20 or lower, ensuring they do not pay more than this price. Stop order, stop loss order. Definition: an order to buy or sell a security once its price reaches a specified level, at which point it becomes a market order. Characteristics: used to limit losses or protect profits. Example: stop order for Standard Chartered Bank Ghana. An investor holding Standard Chartered Bank Ghana shares might place a stop order to sell if the price falls to GHS 15.00, limiting potential losses. Stop limit order. Definition: an order that combines the features of a stop order and a limit order. Once the stop price is reached, the order becomes a limit order to buy or sell at the specified price or better. Characteristics: provides control over the price at which the order is executed but may not guarantee execution. Example: stop limit order for Tullow Oil. An investor may place a stop limit order to sell Tullow Oil shares if the price drops to GHS 10.00, with a limit price of GHS 9.50, ensuring they do not sell for less than GHS 9.50. Market makers and specialists. Market makers. Definition: firms or individuals that buy and sell securities from their own inventory to provide liquidity to the market. Role: ensure there is always a buyer or seller available, which helps maintain market liquidity and smooth price fluctuations. Profit mechanism: earn profits from the spread between the bid, buy, and ask, sell, prices. Example: market makers on the GSE. Firms like IC Securities act as market makers, providing liquidity for actively traded stocks such as those of Ecobank Ghana and Total Petroleum Ghana. Specialists. Definition: individuals or firms assigned to manage the trading of a specific stock on an exchange, ensuring fair and orderly markets. Role: match buy and sell orders, provide price stability, and maintain a continuous market for assigned stocks. Profit mechanism: earns fees or commissions for their services, and can trade for their own account under specific conditions. Example: specialists on the GSE. While the concept of specialists is more prevalent in markets like the NYSE, the role can be somewhat likened to brokers on the GSE who ensure orderly trading for specific securities. Electronic trading platforms. Overview. Definition: online platforms that facilitate the buying and selling of securities electronically, rather than through traditional floor trading. Characteristics: increase market accessibility, reduce transaction costs, and provide real-time information and execution. Example: Ghana Stock Exchange Automated Trading System, GATS. The GSE operates an automated trading system that allows for electronic trading of securities. This system enhances efficiency, transparency, and liquidity in the market. Advantages: speed and efficiency. Transactions are executed faster compared to manual trading. Cost reduction. Lower transaction costs due to automation and reduced need for physical presence. Accessibility. Allows broader participation by enabling remote trading through the internet. Features: order matching. Automatically matches buy and sell orders based on predefined criteria. Real-time data. Provides real-time market data, including prices, volumes, and order status. User interface. Intuitive interfaces for placing orders, tracking investments, and conducting analysis. Example: eTransact Platform, a service provided by the GSE for online trading, enabling investors to access the market from anywhere and manage their portfolios efficiently. Summary: understanding market structure and trading mechanisms is fundamental for effective participation in financial markets. Different order types, such as market orders, limit orders, and stop orders, offer investors flexibility in managing their trades. Market makers and specialists play crucial roles in providing liquidity and ensuring orderly markets. Electronic trading platforms, like those used by the Ghana Stock Exchange, enhance the efficiency, accessibility, and transparency of trading activities. By exploring these components, investors can make more informed decisions and navigate the complexities of financial markets with greater confidence. Analyzing financial markets. Introduction. Analyzing financial markets involves understanding and applying various methods to evaluate the performance and potential of different financial instruments and markets. This section covers the fundamental and technical analysis approaches, as well as the efficient market hypothesis, IMP. By mastering these analytical techniques, investors can make informed decisions and optimize their investment strategies. Fundamental analysis. Overview. Definition. Fundamental analysis involves evaluating a security's intrinsic value by examining related economic, financial, and other qualitative and quantitative factors. Purpose: to determine the true value of a security and identify investment opportunities where the market price deviates from this intrinsic value. Key components. Economic analysis examines macroeconomic indicators such as GDP growth, inflation, interest rates, and unemployment rates to assess the overall economic environment. Industry analysis evaluates the conditions and trends within a specific industry, including competition, regulatory environment, and growth prospects. Company analysis focuses on a company's financial health, management, business model, and competitive position. Financial statements analysis. Income statement analyzes revenue, expenses, and profit to assess a company's operational efficiency and profitability. Balance sheet evaluates assets, liabilities, and equity to understand a company's financial stability and capital structure. Cash flow statement examines cash inflows and outflows to gauge a company's liquidity and cash management. Example: fundamental analysis of MTN Ghana. Investors might analyze MTN Ghana's financial statements, considering factors like revenue growth, profit margins, debt levels, and cash flow, along with the telecommunications industry's regulatory landscape in Ghana. Technical analysis. Overview. Definition. Technical analysis involves studying past market data, primarily price and volume, to forecast future price movements. Purpose: to identify patterns and trends that can indicate future market behavior. Key tools and techniques. Price charts, visual representations of price movements over time, including line charts, bar charts, and candlestick charts. Trend analysis, identifying upward, downward, or sideways trends to guide investment decisions. Moving averages, calculating average prices over specific periods to smooth out price fluctuations and identify trends. Indicators and oscillators, tools like Relative Strength Index, RSI, Moving Average Convergence Divergence, MACD, and Bollinger Bands help gauge market momentum and potential reversal points. Chart patterns. Head and shoulders, indicates a potential trend reversal. Double tops and bottoms, signals potential reversal points after reaching significant price levels twice. Triangles, suggests continuation of the current trend. Example: Ghana. Technical analysis of GCB Bank. Traders might use price charts and technical indicators to analyze GCB Bank stock price movements, identifying trends, and potential entry or exit points. Efficient market hypothesis, IMP. Overview. Definition. The IMP posits that all available information is fully reflected in security prices, making it impossible to consistently achieve higher returns than the overall market. Forms of IMP. Weak form. Prices reflect all past trading information. Semi-strong form. Prices reflect all publicly available information. Strong form. Prices reflect all information, both public and private. Implications. Weak form. Technical analysis is unlikely to provide an advantage, as past price movements are already incorporated into current prices. Semi-strong form. Fundamental analysis may not offer an edge, as all public information is already reflected in prices. Strong form. Even insider information cannot consistently lead to above-average returns, as all information is already accounted for. Critiques. Market anomalies, instances where market prices deviate from IMP predictions, such as bubbles and crashes. Behavioral finance suggests that psychological factors and biases can lead to irrational market behavior, challenging the IMP's assumptions. Example: application of IMP on GSE, if the Ghana Stock Exchange operates under the semi-strong form of IMP. Then all publicly available information about companies like Tullow Oil and Ghana Oil Company Limited is already reflected in their stock prices, making it difficult for investors to achieve consistent abnormal returns through public information analysis. Summary: analyzing financial markets requires a blend of fundamental and technical analysis, along with an understanding of market efficiency principles. Fundamental analysis focuses on evaluating economic, industry, and company-specific factors to determine intrinsic value, while technical analysis studies past market data to forecast future price movements. The efficient market hypothesis, EMH, provides a framework for understanding how information is reflected in market prices, though it is subject to critiques and market anomalies. By mastering these analytical techniques, investors can make informed decisions and enhance their investment strategies, navigating the complexities of financial markets with greater confidence.
Recording stopped.